the biggest risk is with small companies because they want to save money. They're new, they're growing like crazy, and they have gotten into this routine of operating on, a shoestring budget. And their employees are tired, they're cutting corners, there's no internal controls. And then you have a big misstatement that sometimes can be found during tax season, and then, we owe, we might owe a lot more than we thought, or just it's not clean. It's not a healthy way to operate.
Okay.
Audits don't stress me out, but they stress out the whole company.
It does.
Yeah, because I did it. They're normal people too. I understand what they're asking for, and I enjoy that work, and so.
But should I be scared about being audited? So if I get audited for my tax and all of the accounting, right? What should I?
I guess it depends
really
on
do?
what the reason for the audit is. I have a charity that I helped start, and charities never get audited, never. Of course, this one did, and I had called a couple of tax people just for some advice because I was like, I don't know, why are we getting audited? Well.
Hello and welcome to Smart DZ Presents. Keep talking with Ananta. My guest today is Heather Kizer, and she is a certified public accountant, CPA, based in Cary, North Carolina. Heather, welcome to the show.
Thank you for having me.
How are you doing today?
Doing great.
Tax season is coming up, right?
It is.
Are you getting busy?
I am. The work that I do is basically before the tax accountant gets the financials, and so I tend to get really busy towards the end of the year and in January, and then I get busy with my own personal taxes after that. But I hand off my clients' financials to their respective tax accountants at that point and work with them.
What does that entail to when you say, your job is more before the tax filing season, right?
Sure.
And what do you do? What are some of the things that you do in your job or your profession, your career?
So I have my own small business, and basically what I do is I'm a bookkeeper for the most part, but I do have my CPA. And the reason why I say that is the services I provide go beyond simple bookkeeping, in that a lot of my clients are small businesses who've come to me because, the bookkeepers that they've had in the past haven't, maybe don't have the knowledge that they would like to report their financials in a way that helps them make better decisions, business decisions for their business. So the experience that I bring to the table, my background, I started off as an auditor for Big Five public accounting, and then from there I ultimately ended up at a startup in Texas.
Since you are involved in doing the financial reports for financial statements for the companies, right? And you're also looking for the discrepancies. From a layman perspective, right? For me, if I wanted to understand what could go wrong in a company and what could go right in a company, from the financial statement, report, bookkeeping perspective, what are some of the things that you can tell? Okay, this could go wrong. This could be wrong. This is something you have to take care of. Can we list out few points? A business or an organization should take more care of.
Sure. There are a lot of things that are necessary to look at as far as financial reporting goes. For the small businesses that I work with, and a lot of the companies that I have learned about that are not my clients, what happens is a new business who's doing well focuses a lot on their P&L, their profit and loss statement.
Profit and loss.
Correct.
Okay.
And so, and those things might look like, if you're only focusing on the P&L, it might look like your company is healthy. It's important also, though, to look at the balance sheet and really the cash flow for a small company, because if your profit and losses are, look great, but you're not able to collect on your invoices, then you don't have cash. And then you go to pay your bills and you just don't have any cash, but your income statement looks great. So what in the world is going on? Well, you're not collecting, or maybe your expenses are really high and that's hidden in the liabilities on the balance sheet. So it's important to look at the financial statements as a whole, P&L, the balance sheet, cash flow. It's also really important to reconcile your balance sheet accounts. And so, if you, and pay attention to your accounts receivables. If you have a system outside of your financial accounting system where you bill your clients or your patients or whoever your clientele is, and then you report whatever you've billed into your financial accounting software, and then you don't reconcile the third-party software where you bill to your financial accounting software, and there's a huge discrepancy, then you have a lot of work to do to figure out what happened, why is it not talking accurately, why are the two systems not talking accurately. So you have to do those reconciliations to...
And that is exactly where a professional like you come into play. Correct. In order to look into those. Why does the profit and loss account looks great, whereas the balance sheet does not look good?
It's a mess, right?
Right, it's a mess. Now, that could be because of so many factors. One of them you touched on is the receivables. If you're not collecting your invoices, but then profit and loss account says that, okay, you were in profit, $50,000 profit last year, but you really don't have money in the bank, right?
Right.
What could have gone wrong in that situation?
You could, well, a lot of times what will happen is someone will have an office manager posting their journal entries or taking care of their financial statements or their accounting, whereas the office manager doesn't really know. And a lot, you know how it is. You have one person who is in QuickBooks, you have that same person who is taking care of vendors, paying the bills, shipping things, ordering lunch for whoever, and just a jack of all trades of the office. Well, she's likely doesn't have time to go back. She or he doesn't likely have time to go back and make sure that what she posted was correct. Yeah, or small. The biggest risk is with small companies because they want to save money. Mm-hmm. They're new, they're growing like crazy, and they have gotten into this routine of operating on, a shoestring budget. And their employees are tired, they're cutting corners, there's no internal controls. And then you have a big misstatement that sometimes can be found during tax season, and then, we owe, we might owe a lot more than we thought, or just it's not clean. It's not a healthy way to operate.
Okay. When is the right time for a small business? For example, I own a small business here in Cary, right? And you're a regular customer of this business. We do postal services, fingerprinting, and all of those things. If I had to think about those, looking into the accounting, what would be the time I would start, looking for a CPA? Or when do I really hire a CPA or contact a CPA? Sure. Is it at the start of the business or at the middle of it or the tax season? What would be the appropriate time?
I think that companies can get away with not having a CPA, but someone who could just do the regular billing and vendor payments and things like that for a while. Until they probably hit a certain amount or want to start growing. I have one client that just sought me out because they just moved into a new building and they just hired 2 new employees. And one of the questions that he has is when is it appropriate? We feel like we're already growing out of our new lease. Mm-hmm. So when should we get into another building? Can we afford it? When should we hire new attorneys? Can we afford those? When, what is the return on these employees? What's the break-even point? Things like that. And so prior to now, they haven't had a CPA. They've had their office manager doing their bookkeeping, and that has been fine. But they don't know the answers to these questions because they don't look at their cash flow statement. They don't forecast. And they're probably, I think this year so far, they're at 1.7 million. So maybe, it's up to the comfort level of the business owner. I don't think having the office manager is a bad thing. I think that that's the way everybody starts out. And I love small businesses that do that. It's just when they start to grow, that's when you should probably get a CPA involved. Or when you think about debt, should we take out a loan in order to grow or things like that, because you're going to, or if you ever get audited, it would be a good time to get a CPA on board, because audits don't stress me out, but they stress out the whole company.
It does.
Yeah, because I did it. They're normal people too. I understand what they're asking for, and I enjoy that work, and so.
But should I be scared about being audited? So if I get audited for my tax and all of the accounting, right? Should I be worried about it, or should I be looking to hire if I already don't have a CPA? In my, in my company, should I hire a CPA or should I stress out? Or what should I?
I guess it depends
really
on
do?
what the reason for the audit is.
So understanding the reason is the key.
Yeah, call them, find out why you're being audited. Usually audits are with the IRS. I have a charity that I helped start, and charities never get audited, never. Of course, this one did. And I had called a couple of tax people just for some advice because I was like, I don't know. Why are we getting audited? Well, they said, oh my gosh, charities never get audited. I don't know why you're getting audited, And so I ended up calling the person, and what had happened was the IRS changed their process. And it used to take years to get your 501c3, which is, how you are able to have people donate to your organization and have a tax deduction on their side. That's a 501c3. So it took years to get that document processed and for you to get certified, so then you could have donors donate and have a tax deduction on their side. Well, they changed their process, and when we got ours, it took a month, which we were so surprised. Well, the IRS then turned around and audited their process to make sure that we, in fact, were operating as a 501c3. And we were. And when I called them and she explained it to me, I was like totally at ease. She was very kind. We got our work done and we moved on, and all is well. So, it was easier for me, but it might not have been so easy for someone who's not financial or a CPA.
Right. I'm imagining myself into your situation. So if I have a 501c3 organization and then I got audited, which is a rare case scenario, as you've explained, right? I would have stressed out. I don't know, what would I have done as a business owner, as a head or as a member of the organization. But since you had that experience, somebody like me get audited for a normal business, what should I do at the first place?
Find out, what is required to answer. A lot of times when someone gets audited, there'll be a document called a PVC request list. It's a list of documents that you, the client, would need to prepare for the auditor so they could do their work. So get the list, find out if it's something that you're able to do when you have free time, and if it's overwhelming to you, call me.
Awesome.
Yeah.
You're an CPA. Now, tell me the difference between a CPA and an accountant. What is the fundamental difference there?
Well, I, as a CPA, am required to take 40 hours of education every year to maintain my license.
Okay.
I also have an ethics component. So usually, if you have a CPA, of course there are CPAs who are not ethical, but we are all required to take an hour of CPA a year, of CPE a year, which is continuing professional education. I couldn't find the word. So I have 40 hours. Accounting standards are changing all the time. And so because of the 40 hours requirement per year, I'm likely educated on the changes that are going on.
And most likely be updated with
correct,
the most
up to date.
Current,
That's
up to date
correct.
with the most current regulations, rules,
Right.
and things as such.
I also have a sense of, I think what I've seen when I have received a company's financials that have been prepared by an office manager or a bookkeeper, and I'll look through them, I can tell right away that they haven't looked at their income statement or their balance sheet regularly. There will be holes. If you look at an income statement, you're going to have your revenue, and then you're going to have a list of expenses, and sometimes you'll have expenses that could be normalized, but because they coded things differently from one year to the next or 1 month to the next, there's holes, and when there are holes, you can't see. You can't really tell, like, oh gosh, it looks like we spent double the amount this year on salaries as we did last year. Salaries is probably not the best example, but on shipping than we did last year. Why is that? What can we do to cut those expenses? Should we change insurance? Insurance is a big one where the amounts fluctuate. Should we negotiate better insurance rates for our employees? Or policies, for our company, because, as you probably know this, but insurance companies tend to change their rates pretty regularly. And if you don't get a handle on that, or if you don't research new companies, then you're going to pay more than you should. And if you're not looking at your financials, you'll miss that. If someone's not coding things consistently, you'll miss that. So it's important to have someone looking at the work that they do rather than just pushing it into the system and then moving on to the next thing.
People talk a lot about registering an LLC, then writing off all your expenses to that LLC so that you can get a lot of tax benefits. And a lot of social media today is filled up with those kind of media campaigns, and people talk about that. People make TikTok videos, with
Right.
that content. Do you know anything about, or in general as well? Do you really think there is a loophole that public can utilize in order to maximize the return? Is that a possibility, or just a, marketing campaign?
I hate to use the word loophole, but it is wise to, if you're operating a business, like I'm operating a business out of my home, and it is beneficial if I'm using something for my business to write it off to the business, rather than otherwise it would just show up as income on our tax return and there would be no offset. But there's a lot of, like, I use the office, which is like 7% of our home, solely for my business. I leave there and I don't go back in there until I go back to work the next morning, because I will go crazy if I do. but really, so I can write off that section of my house, basically, in the utilities and the internet, as a business expense. Okay. So it's not a loophole. It's the way it should be.
What are some of the things the blunders, the mistakes that you have seen with your clients when you walked into their financial statements and reports and, looked into their bookkeeping and you found, oh my gosh, these people are doing this completely wrong or this is completely messy. Have you ever encountered such situations? And if you can elaborate, it does not have to be specific, but if you can describe about the incident or things
Sure.
as such.
I think one of the biggest things with small businesses that happens are capitalization policies. So sometimes someone will buy a large piece of machinery or land, and they'll just write it off under, to revenue, whereas it could be capitalized. And so a lot of the small businesses I work with like to, when you purchase a piece of equipment or something that's high dollar value, if you expense it, then it's gonna make your financial statements look wonky in the month in which you purchased it. And so a lot of people, a lot of my clients, I've gotten them to implement or create capitalization policies whereby they would capitalize those items on their balance sheet and depreciate them over the life of the asset.
Period of years.
Correct.
So instead of, if I bought a printing machine worth of $5,000 in the month of May, then instead of writing that as an expense, if I capitalize that
Right.
and then say that as a machinery and equipment, and then I depreciate that over the period of 5 years,
Right.
then what are the benefits that I receive?
So from the financial statement standpoint, let's say that you were thinking about merging with another company or you're in negotiations with another company or, I don't know, private equity firm or something like that. It would be good for you to have a set of financials that over time didn't have a lot of big blips in them, like a lot of big, their expenses didn't skyrocket one month and then dip, because they want to be able to predict your company's wealth in the future in the next 5 years or whatever. Now, and so that's from the business standpoint. From a tax standpoint, I would provide those financials that I had prepared to the tax accountant, and the tax accountant would ask you or recommend to you whether or not you should write that whole piece of machinery off in the first year, or if you should, do I don't know, another tax method to write it off that would benefit you, and also based on the tax laws, because some things are deducted by, at 80% this year and some are 60% next year, just based on, the change in administration or the change in the government, whatever is going on with politics. The tax guy can tell you how it would affect your taxes, but from a financial statement standpoint or from a business decision standpoint, I would recommend you depreciate those larger things. Another thing that happens is, let me think. I don't know. We talked about AR. Debt is a big one. Rent. People will have, one thing that I've seen is companies get into a rent agreement whereby they have a five years of free rent starting, and then the rent payment escalates. So what you would want to do is normalize that. You would expense that over the life of the lease rather than having it look like you have no rent for 5 years and then,
Right.
It increases steadily through the life of the lease. You just want that to straight line over the next however many years the lease is for.
Well, great. Thank you very much, Heather, for
Thanks,
your time.
Sudhar.
And
Yeah.
it's fantastic to talk to you as you come to the store, and then we have a casual conversation. But having you on this show and then spending more than 30 minutes over here talking about financial is a great learning opportunity for me as well, and it's a great honor to have you on the show. Thank you very much. You have a great evening.
Thank you so much, Sudhar. It's great to be here.